Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I am Yatin Mota.
Well, Yatin, it seems to be a good day for the markets. Three reasons. First, of course, is the Fed decision that has fueled a rally across global markets, including our markets, where we have seen a triple-digit rally. There's Shah Rukh Khan's birthday today, and King Kohli has already hit a half century in the match against Sri Lanka, right? So, three things, and of course, markets are rejoicing the Fed decision right now, given the fact that this could be the much-awaited pivot that the markets were really waiting for when it comes to the interest rate trajectory. But let's take a look at the markets in greater details now. Nifty closed near that 19,150 mark, a triple-digit, nearly 150-point rally coming in there. In fact, it has snapped out of a two-day losing streak. Monday we were talking about whether or not the two-day bounce that we saw in the markets could be a dead cat bounce, but at least for now it looks like it's a good rally coming in today. So hopefully we will be building up on the kind of up move that we have seen today. Mid and small cap indices were extending their gains. In fact, they were outperforming the benchmark indices today. All the sectors led by the realty, metals and IT sector ended in the green today. Of course, advanced decline ratio on the NSE was firmly in favor of gainers. If you look at the Nifty gainers, in particular, Britannia was the top Nifty gainer on the back of strong operating performance. You had Hindalco, IndusInd Bank, UPL, which had been languishing at 52-week lows, has managed to make a comeback today. Eicher Motors and Grasim is the other one on the gaining side. On the flip side, Hero Moto, Bajaj Auto, that was among the top gainers yesterday, is among the losers today. Tech Mahindra, Bajaj Finance and ONGC were among the losers, which were quite few in today's session. But Yatin, let's talk about some of the results that came out in the second half today. Dabur, Adani Enterprises, and of course also take us through some of the movers in the mid-cap end of the market.
So, if you look at the markets, Nandita, clearly a good day. As you mentioned, I don't agree with all the three reasons that you mentioned. But the advanced decline ratio was almost 3:1, quite strong. And if you look at the sectors, all of the sectors ended in the green. Now, if you look at the movers in the Nifty 500, obviously we had Delta Corp moving 7%, Idea Cellular 7%, REC posted the numbers and the management conference call. That stock was up 7%. What was not doing well on the back of weak results reaction wise was Syrma. That stock was down 12%, Deepak Fertilizer down 7%, and we had the likes of Safari and Solar Industries also reacting to the numbers, down by nearly 4%. Obviously, during the market hours, a lot of earnings came in. Dabur, the volume growth was slightly below the street expectations, but the company delivered better than expected margins, which came in at 20.6% versus the street expectation of close to 20%. So, on the margin front, they have done well. But if you look at HUL, if you look at Dabur, if you look at Britannia, all of these companies have found some bit of challenge on the volume growth front in the rural markets. So probably the market this quarter has accepted the fact that the rural markets are slightly lagging, but most of the managements we spoke to are confident that in the second half of the festive season the volume growth could pick up, and hence you could see the stocks of HUL, Dabur, post the earnings conference call react positively to the commentary, or probably the assurance that second half could be better than the first half.
Right, Yatin, as we speak, I think Tata Motors numbers have come out. I think, looking at it, looks like margins are slightly above estimates, have come in above 13%. But if you look at the profit growth, I think that has lagged estimates by a slight margin. So we'll have to wait for more details. But 13.1% is where the margins are at for the second quarter vis-a-vis expectations of 12.8%. But moving on, let's take a look at some of the other stocks that are on our radar this afternoon, starting with JK Tyre. Of course, we know that tyre stocks have been on a roll recently, and JK Tyre is no different. It has in fact hit a fresh high in today's session after a good set of numbers in the second quarter. The stock at one point was up, somewhere around 12 to 15% in today's session. Yatin, profits have jumped nearly fivefold on a YOY basis. Strong operating numbers. Revenues have also grown over 4%, given the fact that it saw a reduction in its input costs. Input costs in fact dropped somewhere around 9% on a YOY basis. Management remains confident of robust robust demand in the second half of the current fiscal. In fact, it believes that demand will be strong in both OEM as well as replacement market. Management was on CNBC TV 18 today. In fact, he has said that he will be watchful. In fact, the company will be watchful of global headwinds, given the fact that we've seen some bit of in fact the ongoing war between Hamas and of course Israel. So that could take a toll on some export markets. But for now, the export market, the demand in export markets remain healthy. That's what the management is saying. In fact, management also said that cost reduction efforts and a larger share of premium products in the passenger car radial tire segment is something that aided margins. If you look at some of the announcements that the company has made, it has made an announcement of an expansion of somewhere around 20% to its capacity at an investment of 1,000 crore rupees or thereabouts, and it has of course seen a very good improvement in its balance sheet, as well as the company has been reducing debt substantially over the last few years. But if you look at the stock in terms, Yatin, the return on equity hasn't been all that appealing, but price to earnings ratio, if you look at that, it's at 14.4, the 12-month trailing price to earnings ratio, which is much lower compared to the sector PE. And remember, DAM Capital had initiated coverage on the stock in September, and they had said that higher market share gain in the passenger car radial tire segment will aid volumes in the in FY24 as well as FY25. So looks like things are going good for JK Tyre, and demand is expected to remain strong. And remember, this is the cheapest stock among the tire stocks. If you look at the likes of Apollo Tyres, Seat, among all those shares, this stock JK Tyre looks like the cheapest one.
Absolutely, and the tire stocks of lately have done well, given the fact that the replacement and the OEM demand remains quite good in the country. Now, shifting focus from tires to back to FMCG stocks that we were talking about now. Britannia reported a quite healthy set of numbers, much ahead of street expectations. Morgan Stanley's overweight on the stock of Britannia with a target of 5013. Now, if you look at the stock of Britannia, went up nearly 2.5% last time I checked, closing almost near the day's high. Now, if you look at the second quarter, revenue and EBITDA growth, they were quite better than street expectations, and the profit growth was almost 20%. So, double-digit growth coming in for Britannia. If you look at the revenue, that was up 10% on a 4-year CAGR basis, and the gross margin, most importantly, expanded by nearly 4 percentage points. So, given the fact that there is stark improvement in the gross operating margin, as well as margin expansion is expected to continue in the second half as raw material costs fall, I think brokerages have turned slightly bullish than before on the stock of Britannia. So, this is one FMCG stock which has done good in terms of the overall quarter as well as the visibility for the second half.
Right, Yatin, I think Britannia, as you mentioned, looking good within the FMCG space, but as a whole, FMCG space has kind of lost some steam over the last few sessions, in fact over the last few months, so to say. But the other stock on my list today is Berger Paints. Of course, this company came out with its numbers today, 32% jump in its net profit, and revenues have risen 3.6% on a YOY basis. Margins have also come in higher at 17% vis-a-vis 13.5% over last year. Now, the company has said that there has been an impact of a delay in the festive season, and of course the fact that we had September rains, unseasonal rains in September, or late rains in September, and that is something that has taken a toll. But the management sees considerable improvement in the December quarter. If you talk about the decorative paint segment, it has seen a double-digit volume growth, but in terms of value, the growth hasn't been all that great. Network expansion and implementation of digital initiatives are some things that will bear fruit in the coming quarters. That's what the management has said. But remember, Street has turned cautious on Berger Paints, given the fact that, of course, Grasim is making an entry into the paint segment, and it is aiming to launch the Birla Opus brand in Q4 FY24, the fourth quarter of the current fiscal, and that could be a bigger threat to Berger Paints, given the fact that it is a number 2 player, and Grasim is also aiming for the number 2 spot. So, compared to Asian Paints, Berger Paints is the one that has the threat of rising competition in this sector. And apart from that, if you look at the stock internals, this stock at 66 times 12 months trading PE, it is among the most expensive in the paint sector. So, Berger Paints slightly cautious, the street is also slightly cautious, and the stock was also not all that, didn't do all that great in today's session, Yatin.
Absolutely, and let's see how really does the FMCG or the entire FM consumer space business really shapes up, because Asian Paints also had slightly weaker than expected volume growth, especially on the premium segment. So yes, paints are something which we'll be watching out for in the second half with the festive season moving in.
Well, we'll also be watching out for the outcome of the match, given the fact that India has seen, has maintained its winning streak in the World Cup till now. Hopefully that will continue as King Kohli seems to be firing, on all cylinders. But with that, I think we are done with this edition of Closing Bell. Thanks a lot for tuning in. But of course, come back and join us at 8:30 a.m. tomorrow morning when we talk about specific stocks and all the earnings too that we'll be watching out for in tomorrow's session. It's a goodbye from me and Yatin. Stay tuned to Moneycontrol for all your other news and updates.